to the very first episode of this newest podcast series, Leadership Masterclass with the C Suite. And the topic for today is startups and funding. Right? Every business starts with an idea and some amount of fund and a team. But not everybody sees the kind of success they aspire to be it taking it to the IPO or being an acquisition. So, what is the secret behind a startup's success, right? What makes a startup tick? What makes it fail? Who best to answer this question for us today, other than Mr. Rajeev Madhavan, the founder and general partner of Clear Ventures, a Silicon Valley based venture capitalist firm that has helped so many startups in various stages of their execution journey, be it funding or forming a team, the execution, and finally seeing it through IPO or an acquisition. And personally, in the stellar list of companies that Rajiv has personally helped to succeed are two companies that are personally very dear and close to me, which is Robin Systems, which is now part of Rakuten Symphony, and Magma Design Automation, which is now part of Synopsys, a customer that we value and work very closely with. And both of them are market leading companies. And I've always wanted to ask Rajiv these questions when we were briefly associated with Robin.io, and how it is even humanly possible to accomplish all of this in such a short span, coming from a completely different country, right? What gives you the guts? What gives you the appetite to take such huge risks? Then I also realized when I was researching about him that he didn't start this now, right? I mean, there is a very popular YouTube video that's available where he talks about selling comic books as part of his school days, and then making some entrepreneurship journey out of it. So I think this is going to be fun finding out from Rajiv. And Rajiv, thank you so much for joining us today.
Thank you for having me here on this podcast, Shubha.
Yeah, thank you, Rajiv. So my first question, right? I mean, every time we go and speak to the millennials, if you call it, right? I mean, the young lads coming out of college, or I just go type in Google Trends, right? The search engine which tells you what is the most trending topic among the newest entrants into the market. The most commonly searched phrase or the most common trend is that how to start a startup and how to get a VC to fund my startup. Please answer this question for us. Is there a proven approach or a blueprint on how to start a startup? Are there any, certain best practices, if you will?
So at the core of it is, what idea do you have to do a startup, right? I mean, there are various stages that a company goes through. Clear is a seed and Series A investor. Predominantly, we start our journey at the very beginning. For example, in the case of Robin, there was no clear idea. We participated, did whatever it took to make the idea happen, morph the idea appropriately as we moved into telecom, etc. It was all opportunistic things that we helped participate. So it's not just invest in our case, it's usually participate and help the companies reach their maximum fruition, right? I mean, this is one of the key things that we do. From a founder perspective, there could be many. There could be very well-baked ideas that we get to see. There could be some where I'm a gifted talent in XYZ, say, for example, in large models, which is today is the biggest kind of hoopla right now, right? I mean, so and I am thinking about leaving my job in XYZ companies, say Google, Facebook, etc. And we partner with them, and we help them come up with ideas and seed them and try the first approach. Right? But fundamentally, life has gotten a lot easier for people to get money today, because getting a cold email from somebody telling me that, I'm doing the startup, I'm the CEO, I'm the founder of this company, it really does not get my email. I get so much email that you are never going to get an attention if you're just sending in that kind of emails. Unfortunately, we try to read it, but even getting through that is very, very difficult in most cases, right? So getting somebody who has been a trusted hand in the past life send you an email saying, I have in the past worked with this person, he's very good technically, or he or she is, thinking about a great idea, here's the basics of a good idea, or he or she is the gifted talent at company XYZ, is thinking about leaving, I think you guys should talk to her. attention is immediately going from 0 to 100, right? I mean, and it's the best way to get it, right? Now, in 91, when I started my first company, obviously there were no Indian investors. I mean, there were very few angel investors at that time. There were VCs, but the VCs had never seen Indians in at the rate at which they are seeing today. I mean, the Deshi revolution that's happened in the United States is never in play. So it was much more tougher to get money. So we went without money for a long period in my first two startups. Right? I mean, it was just core guts and core going at it because of various reasons. Right? I mean, there were reasons why we did the startups, but fundamentally that has changed today. I mean, the chances of people being connected to somebody who knows someone in the venture community or in the investment community as a general principle is very, very high today, right? I mean, the probability is so high that you should be able to find the right people to give you the connections from your past. So that's the single most best way to get attention. Obviously, then everything is merited by the actual thought process you have given to doing the business, right? And it also, this is where doing some homework makes a lot of sense, because some venture firms like to see a fully built out company, meaning they want to see a good idea, a good execution team in place, and sometimes some validation from customers, right? We can go in with just the team and a basic remnants of an idea, but that's not necessarily the case with all the venture funds, right? So you basically have to look at, what is this VC all about? Is he capable of jumping in at that early stage? I mean, everybody will claim I'm a seed investor in Silicon Valley. I mean, but fundamentally there is seed and then there is seed, right? I mean, it's just
Yeah.
very, very different. So you basically have to do that research to understand and talk to past companies. So, for example, the early people at Rob and early people at all these places. In your case, it's a unique method to understand whether the VC is actually a fit for you. And
Mm.
once you find the best connection to the VC, have your idea being formulated in such a fashion that you can explain it to the best you can, because you're getting your first meeting. Sometimes you may get one or two shots, but not more than that, given the amount of meetings and amount of startup companies that you get to see, right? I mean, we probably see about 5 to 8 companies a week per partner. Times, you can take 50 weeks and you just basically go and say
400.
400 companies, and we do 4 to 6
Wow.
companies, right? So you sort of have to make that first level determination from our side very, very quickly. I mean, it's not, and we will get it wrong many, many times. There's no doubt. I mean, if I start looking at how many I missed, I probably will be sitting in a corner and saying, wow, okay, that's bad. This is bad. But you can't look at that. You got to look at what is in your hand and what you do as an investment, and then make sure that you pursue it to make it successful, right?
Okay. Okay. So, so what makes a startup tick? Like, are just talking about your personal experience itself, right? Are there any startup ideas which you rejected, but now you wish you had a stake in? Like, are there companies like that?
Oh, there are many, many, many like that. So I mean, you cannot look at the ones that you did not invest in. You got to look at the ones you invested in, because it always happens that you miss some investments and you clearly look at it and say, oh boy, I mean, I wish I had done that. Or in some cases, I would have given some small investment into an early stage company and not really active role, but then it goes on to do well again. I mean, it's not the formula is somewhat simple in a startup, right? Your execution has to be above par, above any big company that's out there. I mean, building a very good culture of the company where everyone can speak up and not issues are not hidden in terms of the software that's being cooked, right? I mean, it's basically no different than a kitchen. If you put extra salt, then you need to figure out either you have to compensate, or you put too much that you can't do anything associated with it. So
Yeah.
it's better to know that a priori rather than having an end customer reject it, right? I mean, so you sort of have to have a culture of openness, a culture of of strong execution, and then obviously hard work. I'm not going to not tell you. I mean, every founder is expected to do their hard work, and which I find very interesting in today's world. Sometimes you find entrepreneurs where they've heard entrepreneurship is cool and they're going into entrepreneurship without not understanding. They're not understanding that this entails a big shift in your personal life,
Yes.
right?
Yes.
Like I remember my first company, my Christmas, etc., was spent at the company. I was lying in the couch and sleeping there. I mean, it wasn't like, I mean, if my wife wanted to see me, come there, bring some food, and I will do some things because I had a release to hit, and I'm going to hit that at all means. So it's a different life, right? It is something that you're not going to trade off. And if somebody says, okay, there's no hard work, that's a complete fantasy, because it's never invest and to the right, it keeps going well. Now it was that way for a while in Silicon Valley because there was so much funds going along, right? I mean, you could get enough money that even if your idea sucks, your execution can have a few mistakes, you still are, as long as you're good at raising capital, you could get many shots to goal, right? I mean, that in a downward economy like today is not going to happen, right? You basically have to understand that the one or two clicks that you get, you got to make it count with a
Correct.
with a venture person, right?
Yeah. So another question I had, right? Do you always spot a wave coming, or you ride the wave once you know that there is a trend? Like, what is the
Well,
strategy?
so let me take this large model aspects of things that are that's now happening, chat GPTs of the world, right?
Yeah.
We probably have started investing about a year and a half to 2 years ago in applications that use large model, right? We now have 4 companies that are using that we have funded, right? I mean, so the last 1.5 years was spent on that. Now we have to say, hallelujah, we've done enough investments shortly in another 3 to 6 months, and try to make these ones successful and make them happen, right? So it goes in waves. Silicon Valley is full of investors who just follow the waves, right? Basically, they hear this is happening, and then there's way too much overfunding in that particular space. So you have to be, if you're doing seed and Series A, in general, you have to be on the cutting edge and on the first wave of things, right?
Right.
The exit value of a first wave versus a second wave is generally much better for a first wave.
Yes.
Now, that's not always the case. You brought up, saying Googling for information. Google is one company which is number 7, or some say number 19 in terms of search company, right? But
Yeah.
a combination of key technology in conjunction with a great business plan and bad execution by all of the others left this team in leadership much quickly, right? So you do need luck on your hand, and you do need execution. But sometimes the second wave company can shock you, and that's raw technology that makes it happen. And there's no doubt about that. Raw technology as well as innovative business ideas that came about. For example, the AdSense idea of making the ads work. They were cleanly the first innovators of that, right? So you kind of have to look at it and say, I mean, be on the first wave for 95% of the founders. For 5%, if they are esteemed talent and have something very unique, then you may take into a space which is an already defined market, right? Now, having said that, for example, in large models, right? AI has been now around for about 10-15 years in enterprise. But the first wave of AI companies which have done things using AI will all probably, especially in the enterprise side, will all get usurped by large model companies, because life is going to get a lot easier in terms of what could be done. There are some questions about the models variations and model giving wrong answers, etc. So there are caveats to what it does, but there is opportunities sometimes that happens to redo an existing business, and that is well underway. That's also possible in some area. But in general, simple principle: be on the first wave for 95% of the companies that we are funding.
Yeah, but a team usually starts with a prototype, right? But they don't approach you for funding during the prototype stage, isn't it? I mean, is it fair to assume that
So I think, Subha, I think, we deal with companies where probably about 10% as a prototype, 90%
really?
as 90% as an idea, and maybe can go to a whiteboard and sit down and chat with us. That's the reality of the stage we talk. So that's why I said seed. And then there are seed where you have actually done prototype and you have sold the first licenses, and then you call it a seed. To me, that's not a seed, right? I mean, that's like
Right.
you already showed the proof of concept. But today in Silicon Valley, everybody wants to say everything is a seed, so they'll redefine a Series A to be seed, etc. But when we talk, probably 90% of it, there is not one line of code written.
Wow.
So
That's a unique strategy, right? Because what we have heard is you you have to have at least a first customer or at least a sign of
yeah,
someone.
that is completely wrong. I mean, it if you're doing, look, in Silicon Valley, in fact, I don't want. I mean, for me personally, I've done 4 startups of my own, right? I mean, that I have done. Knock on wood, these have been a great rides for me. My startups that I execute, that I ran as a company, those ones, the fun portion were the early stages of creating the technology. I mean, then you have to go and execute, right? So I love that early stage of prototype. Absolutely, no doubt. That's the stage where I think I can contribute the most for these companies, and I would like to spend more time on those companies rather than the later stage companies, right? It's all about. I mean, I got into this venture mainly because I think, the best advantage that I get out of venture, besides obviously providing return to our investors, is that you get see a lot of great ideas from the world's best talent, right? I mean, and that's the best job satisfaction of the venture world. I mean, there's a whole pile of other things which are not the greatest job satisfaction, but that's life, right?
Yeah. So the other point that I had was, I mean, everyone says, I mean, there are a lot of solopreneurs with great ideas, whatever. But what we have heard is that to get a VC to fund, you need to take a team with you, right? The solopreneurs doesn't work. You at least need a couple of people and represent a leadership. Is that true?
It is true for a very large sense that you do need to get a team built out, right? I mean, because it reduces the risk of being able to hire a team, right? I mean, because if you have some people who can hire, we have done sole entrepreneurs now for a few companies, right? And one of the problems of sole entrepreneurs, there's 2 issues there, right? If the sole entrepreneur is coming in and saying, I want to hire the team, I'm hence, and the team, the early people are going to be co-owners of the company as I am, right? And they need that culture. If they're not that, and they think they can keep, 80% of the options or 90% of the options, and you would work for me, it's what I call the India Bunia culture of startups, right? I mean, that does not fly. And so we try to make them allocate early stage. And if they're not allocating a big enough pool, some of them will give you lip service saying, oh, I know the value of hiring people, etc. I'm going to hire. But they are very stingy when it comes to giving some shares up. And I
Yeah.
always remind them 100% of zeros is zero, 100% of 0% of 100 is also the same. So inversely, you essentially need to make sure that your company is worth something to have some value. So getting a good team, hiring a good team, and if you're a sole person, you should say, I've identified these 3, 4 people for various reasons they can't join now. I will find them or these people, but they are going to get the co-ownership almost as much as me. Help me structure a deal to make that happen, right? I mean, if it is not that, if I'm coming in and saying I'm the only guy and I'm going to be the main team, that is probably not going to get funded. And we have right now a term sheet that we are writing where we are putting in a very large pool. I mean, it's a single founder company, and for the remaining founders, we are putting together about 20 to 30% in the pool, and probably 10 to 15 for the other employees. So you just want to make sure that people have that allocation in their pocket, and They are, I mean, this is one of the diligence things that I think we could have done better uh, at at Clear. I mean, I wish at Rob and I had to get involved to beat them up, early founders to give some shares to some good people, right? And to hire the right talent. And it took, a lot of pushing and shoving to make that happen. I mean, and, thankfully we landed early on Partha, and that changed the game, right? I mean, but that's a good example, right? Being able to get that kind of talent, giving them the ownership to make that count was very, very important.
Great. So my next question for you is that, I mean, so we explored two important tenets, right? One, you spoke in detail about the idea, and the second one is about the team. Now let's talk about the third metric, which is the financials, right? What is the aspect for you in the overall financials presented by the founders that gets to build that trust? Do you look at financials at all, given that you're even open to hiring solopreneurs, helping them with the team? No prototype is also fine. So, given all that you have told us, how much is the financials that they share important for you? What do you look for?
So it's important that the founder can actually articulate to us that this can be done with X number of people, and we actually drill down and we can agree to the fact that the headcount plan you have is correct. You can build not only the prototype, the first few customers with the first round, right? If so, what's the amount of money required to get the first few customers, and what's the amount of money required to deliver that product before you get to that customer engagements, and a few people to help communicate and work with the customers at the early stage, right? I mean, these three things, what does it cost in terms of the people? Where are you going to put the people? What's the cost plan? That is an exercise we go through, right?
Okay.
And so if there's no point in giving a founder a couple of $1 million and he runs short without having achieved a prototype and the first few customers, right? If you go to the next round, you need to be past these two stages. Otherwise, there is no point in doing that, right? I want to say, like, we have 100% of our companies which has taken seed from us, and that the prototype has gone to go on and get their next round. I mean, this is 100% matriculation that we have, but because we spend the time in making that happen. But the point is very simple, right? If you're not thinking through that, well, we probably won't fund you, because fundamentally we need you to know, and we spend the time to understand the technology enough to say, if you say it takes me half an engineer and we think that's an impossibility, we're not, and sometimes we have expertise that come and help us as well, we're not going to fund that, right? I mean, it's basically, okay, what does a program like this to execute this cost, and can you get to a first customer, a good prototype, and a good go-to-market motion, and the first few people who have communicated can now articulate that very well. Then you can go and get your next round of funding. Prior to that, it's impossible to get the next round of funding.
Okay. So the closest access to a VC presentation that we've all seen in real life is the Shark Tank series. I
Yeah.
mean, that is our access. And so there we have seen that the participants are asking for, whatever the money they want, and the sharks are saying, I will give you this, I will have you that. Is that how a negotiation happens? Is that how people come and present to you saying, I mean, let's say you're
You
saying,
know, I don't want to say that there is no negotiation at the end. Okay. Every deal has some negotiations at the end. And then you get big law firms involved in closing this paperwork. It does take time, right? If an entrepreneur has unrealistic view that I can just be done if it's a true seed, if it's a note, then you may be able to get up and running a lot quicker. But having said that, there's always negotiation that happens and has to happen, right? I mean, it's a market, and the market is certainly going to have that, right? I mean, so but it's not like the Shark Tank where it's mostly consumer apps in terms of what
yeah,
it is, and you can kind of, and the numbers they are actually investing is very small
Paul,
fundamentally.
yeah.
I mean, and so when I do my personal investments, that may be very much like a Shark Tank investment. Right? I'm not going to spend that much time for the venture fund, right? Because I'm
Yeah.
doing it because so and so is good friends with this company, that company has worked with me in the past. I'm certainly going to write a check a lot faster than if Claire is writing the check, which is a lot more sane and hard diligence that needs to go in, right? So there's a difference there of what happens. And in that particular case of Shark Tank, obviously, besides the fun aspects of things of what they make it to be, it's consumer apps, lower investment, um, and it's just pure, theatrical
Theatrical. Yeah.
impact that needs to be done, right? I mean, but yes, the negotiation does happen.
And how much diligence do you do independent of whatever the founders or the founding team comes and tells you? Do you
There's a
spend a lot of, yeah.
Yeah, so we need diligence on the founder's references. So unless we have known him in the past and he has worked with us or something like that, we make a list of those investors. All of the partners at different times call these guys. The best diligence is to then look up. We have a team which actually pulls up names of people we know that are connected to them and may know them well. We would immediately call them. So there's a lot of diligence that is done. And again, the main question is are they going to be, building a culture which is very good and conducive for a startup, right? And I mean, it's got to be a very good startup culture that he or she can build. Second one is he or she, if it's a sole founder or even if it's a team, is willing to pay up and hire people.
Yeah.
And look at Magma, for example, or the companies before that. My salespeople made a lot more money than I ever made in terms of cash comp in all my life. And every time I did that, I'm so happy because they're executing
Yeah.
their numbers. They miss their numbers, they're not hitting their numbers, but they're making their numbers and they're beating me in salary. I am so very happy. I mean, it's just the way it works, right? I mean, I absolutely. I mean, and when Magma went public, I remember in 2001, my VP of sales for the next year, we were setting numbers and we were having this event kick off the whole company. And in front of everybody, he said, "What if I blow the number by 25%? Will you give me your new car?" I just bought a new car. He said 600. I said yes to him. And a year later, we didn't know till the night of the quarter end because all the paperwork gets processed the night before. Have we hit the number? So at about to 11:30, I knew, oh my God, my car is gone. I don't have a car. Right? So essentially, but I felt so good about doing that. Right? It was a big bet. It was a company did 25% higher numbers than what we had promised, not to the street, but we had promised to our board. So it was very important to kind of incentivize and build that culture within the company where but that requires an entrepreneur to not look at my comp, look at the total value of the stock increasing, and thereby everybody increasing in their value.
Yeah. Yeah. Now let's talk about failures, right? Let's say you invested money and the startup did not turn out to be what you wanted it to be. I mean,
Yeah.
what do you generally do? Like, two things. What is your exit strategy? When do you take the time to pull off and say, time out, this is not working? The second one is, what do you personally feel? Like, do you get disappointed?
Yeah. So I first of all, I am not a traditional VC coming in with an MBA background, becoming a venture capitalist, right?
Yeah.
I have had all my startups succeed, knock on wood, when I changed from an operator to a VC, right? So for me, every startup is not a statistical arbitrage of number. Okay. I really want them to succeed. There is no doubt about that. So I put in Herculean efforts, but very early on, if it's not working and there are issues, I go toe to toe with the founders. I call them in and we spend a lot of time. I'm doing that with our latest companies even now, right? I mean, it's a fight with them to kind of make them realize that at this current rate, we're not going to have a scalable company, right? And if you can't build that, so you try that for one or two efforts and a quarters, 3 quarters, and if the person is not willing to make the changes, then it becomes a very tough proposition. Then, for us to put in our subsequent rounds becomes a much more complicated scenario, right? And so it all comes down to being able to tell them the issues that is coming in at least a couple of quarters ahead of time, and helping them go through that transition. And in some cases, it's because the market has gone south, right? Right
Yeah.
now, for example, if you're selling something and you're selling into a supply chain business, etc., you are going to be impacted by what's happening with the recession.
Yeah.
It's a recession or not a recession, inflation going up, etc. You basically are going to be impacted. There's no doubt about that, right? So in that scenario, I find all this, MBA venture capitalists on Sandalwood. Sorry, I have nothing against MBAs as much as some of them who have never run an operations come into these board meetings and say, "Let's sell." Uh, let's find somebody to sell. You just can't sell a company at that stage. You need to create, if you have the fundamental principle that your technology is right, your market is there, then sometimes you have to find a path, which means sometimes cutting headcount substantially, surviving through recessions, and coming out on the other end. And this is something that I help the founders go through the transition. So sometimes in bad markets like today, there are companies, right? I mean, we had essentially probably saved like 180 quarters worth of total capital from all our companies that we went by doing this work one-on-one with the founders, saying we're going into a tough market, don't add a head count, let's cut the cost of what you have either planned or in some cases correct as well, right? So you basically need to make sure that you go through that planning a lot. But if 2-3 quarters runs by and you're not able to change, or if the founder is not hiring people just because he or she is not willing to give shares to others or bring the right comp, then we lose our investment at that early stage. I'm willing to call a foul by us at that point itself, rather than spend time, because when you're spending this kind of time, you can't make a decision so late, because you would have spent more good time, good amount of energy behind bad decisions that you made. So it's important to call the bad decision, but we work with the founders, make them understand. And in some cases, by the way, if you have two founders, they fight.
Yeah.
And you have to get in and try to resolve. Sometimes you can't resolve. Sometimes you see one of the founders going, and these are all things that you experience when you go through this, right? So even all of that, we are happy to sit through, as long as people are executing, hiring the right talent, and going through the right processes.
Yeah. So it's generally, right, whenever we go and talk about investment, so you've spoken about idea, funding, and the team, right?
Yeah.
But the
Yeah.
moment there is this grapevine or whatever we hear, that the moment you go to a VC and you secure their fund, it becomes their, a lot of control is passed to the VC firm that is actually funding you. They have the power to even let go of founders and bring in a completely new team if they are not convinced with your. Is that true? Do VC firms have that much?
So no venture fund wants to fire any founder. I mean, unless there are some gross issues, right? I mean, gross issues could be, as I said, not hiring, not bringing in bringing in employees at the right comp, lying to the employees, lying to the board, putting plans on a repeated basis, and the board believes that's happening. So no one in their right mind wants, and the founder is what you bet on and what you try to survive on as much as possible, right?
Right.
Sometimes the founder needs to realize that it's not about the title CEO, it's about bringing in the right team, and that may mean somebody else as CEO. Again, Google is a good example. The two founders were fighting all the time, from what I understand, and they had to bring in adult supervision in the form of Eric Schmidt, right? I mean, but they had the common sense to do that. I'm sure the venture firms pushed heavily to make that happen. But that kind of thing sometimes happens when you figure out that you don't have the operational go-to knowledge, you don't have the operational knowledge to make the right calls in a tough market, and there are opportunistically the right person sitting around the corner to be able to help you, right? I mean, those are the calls that make it. And obviously, I mean, if the person is arrogant and is creating lots of issues with respect to employees, and I mean, we've had one or two scenarios where we had to take action on the founder because there were complaints from the remainder of the employees, right? I mean, or you remainder of the employees talking to others and then it coming to you, that you're asking for trouble, right? I mean, so those things are the only way a founder can have an impact. Otherwise, this is the person who conceived the idea, this is the person who executed on the idea, and who was very, very key in executing and delivering on the plan, right? But as with any plan, it's not the idea that matters, it's finally the product that counts. So if if you cannot do it, and if you're not bringing the right people, then then the board as a collective organization has to make the right decisions.
Yeah, yeah. So my final question on this, right? Taking a startup to to a successful end, right? There are two things: IPO or acquisition, right? What is your favorite way of ending a startup firm? Like, what do you prefer, and how do you do both?
So I do not look at the exit as a kind of the plan that it's going to be an acquisition or it's going to be an IPO. It's just you hit the numbers and you keep executing, good things will happen to you. Okay. A company does not get sold, a company gets bought. Okay. Meaning somebody's coming in and saying, I need this, I absolutely need to buy it, right? You don't go and sell. There's no sell sign that works well. So it's got to be that incoming offer is happening. So if you're executing well and not focused on these things, the right deals will come to you at the right time, right? I mean, so for example, there are some times where the founder has decided, I want to sell the company,
Yeah.
and I may think it is not the wisest decision. I had that at Robin, for
Yeah.
example. I was not pro selling. I would try to convince Partha that I think we should stay another 1 year to 2 years, right? I mean, not a secret. I do believe that we were beginning to take that uptick, but obviously he could have been right given that the recession hit right after that. So maybe his call was right. But irrespective, you kind of have to look at it and have that debate and discussions. And I don't have these discussions at the board level. I have these discussions one-on-one with the founders that just make sure I understand where they're coming from. And they may have their own parameters because of various reasons they want an exit. And that happens, it happens, right? I mean, so you kind of have to not build a company for an exit.
Or an exit.
You build it to create value. Once you build value, good things will happen. What that is, I mean, there are bankers and others circling around the market. Good things will always happen.
Right. That's a great advice, right? I mean, a lot of people start with, I have to exit in 3 years. I have, these number of years. I want to take you to IPO. But rather, it's better to focus on building a solid company and delivering value and like
Yeah,
the best
yeah.
outcome.
I mean, sometimes I know that some companies have built for exit. They see an opportunity where somebody would buy it. I think if you build that way, I mean, unless you have 4 or 5 of those buyers, the control is within the hands of the buyer anyway. So
Yeah.
what's the point of building this kind of a company, right? I mean, these idea I'm a tuck-in for so and so is something that I just do not believe in building a company for. You build for the customer value,
Yeah.
and they are paying customers and they're doing well. You're all well set. Don't focus on these other things. Do you have the cash to survive and operate and create value? Then you're done. What the exit is, it comes naturally.
Okay. Thank you. On that note, I have ended the serious conversation. Now, we
Yeah.
just want to poke a little bit about the personal side of Rajiv and ask you some funny questions. Is that okay?
Okay, sure.
Okay, let's shoot. All right. So you're off to the moon and you're likely never coming back. What is that one thing that you will definitely take with you?
Well, that's a very tough question. I mean, because I've realized more and more the value of family. Right. I mean, when I was doing my startups, I didn't get time to spend with my kids as much as I did. Right. And today they both throw that on my face as a kind of a guilt. So if I do something in the future, I would certainly be be, I would take my family and I would be more involved on it a lot more. And this is the guilt from the past, talking a lot more than anything else, because it was an important portion of life, and where I mean, I went to my daughter's things. First 4 or 5 years, I did go a lot, but after that, till their 10th grade, when I was doing Magma, I was probably a no-show in terms of what it was, right? And I wish I was more in action at that period, right? I mean, it's a guilt that drives me, that if you tell me what to take, I'll take my family along with me if I.
Nice. Okay. So a book or a favorite movie that you keep visiting again and again.
So, I'm not a big buff of movies and other stuff. Essentially, in terms of books and in terms of everything, right now, obviously, I mean, I've been till about last year and including last year. There have been sports when I'm controlling my diet and I'm eating healthy, doing some gym, etc. I mean, just before COVID, I was doing that. When COVID hit, I gave up on all of that. Right, I put on the COVID weight, and all of that applies to me. And right now, I'm trying to read and understand about what is the food, because I'm pre-diabetic. I used to be pre-diabetic. I'm probably on the diabetic range by now. So I do need to control myself. So I'm actually becoming a lot more learned about all the glycemic indexes and what food, what I'm spending a lot of my
Lot of
personal
time.
time on this thing, because I need to nail it down in the next few weeks before my next things happen, right? So you just have to nail it down, because it is kind of reached a point where it'll have an impact if I don't control now, right?
Yeah. 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 So what is Rajiv Madhavan's USP or brand value? Let's say you're not in a room and your colleagues and friends are talking about you. What are they likely telling or talking about you?
Well, I think there will be a lot of them which would say I'm brash, aggressive, son of a gun, doesn't give up. He's but at the same time, no one would say I don't put the hard work and I don't help. I mean, I'm pretty sure they would say those two things, irrespective of the aggression, the push that I do, that I contribute to those things. I'm pretty sure everyone would say that. And I'm mighty happy about a lot of my companies that I get are ex-Magma people referring. I mean, it's been a great to have had a team built happen in that company. That's people have gone on to run many things, and I'm extremely proud of that fact more than anything else.
So what did Rajiv in his 20s wanted to be? Are you living the dream that you had in your 20s now?
So you know, right through my undergrad and even grad school, I sort of coasted through what's the minimum I need to get out and get done and get to the next stage is all I had as goals. I never worked hard. That's
That's
the
unbelievable.
first first thing. And I joined my first company, Bell Northern Research. I've talked about this. I had a great manager, Ed Wapney. And 6 months into it, I mean, we have this April Fool's thing in BNR where, everybody takes on the new kid in the block. I was the newest hire, and they make something happen to you. So, for example, in my case, our emails were all in this VMS system that we were using, the old mainframes. And they basically deleted all my emails. Looked like everything was gone, back off, and just come in and everything is gone. And then half an hour later they'll come and say, happy April Fool's Day, the whole 50, 60 people on your desk, and maybe. So I decided to go and take on the whole 50, 60 people by I was one of the Unix gurus at that time, and in the group we had Sun Machines. I basically locked out, basically wrote a, wrote, you know, basically a security violation. You should reach all of their accounts were frozen for a while. And everybody's like, what happened? And so my manager called me and said, Rajeev, this guy who did that, all that stuff, I don't see him at work every day. So if you take your job and you actually do what you're doing at that, I think you would do well. And so otherwise, I may have to fire you. Literally, you've been coasting for the last 6 months since I hired you. So I took off, and from there on, every 6 months, I got a promotion at BNR. Really did well. So you do need that person in your life who resets
Yes.
you.
Yes.
And he absolutely reset me to think the wise. And it's always been, life has all been finding somebody who you actually comes into your life at the right time and gives you an advice, right? So I had even after I joined a company, I had no plans of doing a startup or anything. I became very good in this thing called hardware description languages, which was when I wrote a textbook on that, all by accidents, not by plan. And until about 24, maybe 25 or so, I had written a product at Cadence, and I was traveling with the founder of Cadence to Florida for visiting to our first customers and presenting the product that I had worked on, right? And on the way back, he had one too many wine, and he invited me to sit next to him on the flight. And I asked him, what would you have done differently? And he said, this analog division that we're doing, I probably should have done that as a different startup. And what went through my mind is, then why am I not doing a startup, right? It's just the kind of the light went off, and I quit the next week to do a startup. So it was just, I heard about startups after coming to the Valley for 1 year, but suddenly this kind of opened up my doors, and
That moment.
a moment, and I said, then I should be doing one. And
Wow.
I resigned, and he called me to try to keep me, and I said, but you told me that you should not do the startup. So that's basically so it's been early on, it was a set of accidental things that set me on the right path.
Yeah.
It wasn't hard work. It wasn't particularly, that I put in a lot of effort trying to understand what I was learning. It was just, what's the minimum required to get to the next stage. And then life throws a right curveball, and you start working hard, right? That's
yeah. So a bunch of college grads, all of them from the same college, same degree, same everything, right, are coming to you and seeking for a position in Clear. Right? On a soft skill basis, what would you look for? Which one gets to be in your team?
So I think the desire to actually do something new, and more importantly, someone who goes through an interview with me and asks me a lot of questions, intelligent questions, right? And it's not a prepared questions, right? Being able to interact and being able to talk, and being able to take some of the problems that's given during that interview to solve and to kind of answer it. Very, very important, right? And lastly, it's about, we may have an action item at the end of the meeting and say, why don't you answer that?
Yeah.
That person then takes a week to answer and studies and sends me an answer. That just means he or she has gone and talked to 20 people, collected the answers, and put it together.
Yeah.
You want the person to respond quickly. You want the person to be very interactive, and has to have, domain knowledge is a given, right? That especially at the stage I am, somebody would have interviewed the person to say this person has that domain knowledge. The desire to work, to put in the hard work, and the ability to think out of the box, and be able to actually engage with the person is very, very important, right?
Okay. So Elon Musk, Mark Zuckerberg, or Jeff Bezos, your favorite founder? Your favorite type of founder among these two?
So I have no idol worship of any of these people. I just believe that they all come with their own positives, and they all come with their own negatives. Okay.
Right.
So, for example, all three of these people are highly entrepreneurial and work very hard, right? Literally put their life into it, right? But different people have different strengths associated with it. For example, Elon, great in vision, great in being able to market it in an aggressive but phenomenal way. Jeff Bezos, methodical, stays the line and goes on a lot more straight trajectory and makes it happen. Mark Zuckerberg, I give the value that he did fundamentally very well, looks like with his family thing, which is a big balance that entrepreneurs, if you look at the other two, they're messed up.
So,
Uh, uh, and I mean, and so you sort of look at what are the wrong things they've done and try to correct it, not go for an idol worship on any one of these three people, right? I just don't think that no one in life is a demigod, and you just have to go and execute on your path, your trajectory, and not be beholden to somebody's life one way or the other.
yeah. So your favorite activity to beat stress? Do you have stress? Do you get stressed given the fact that you have so much riding at stake,
No,
right?
so
What
let
are
me actually, I want to answer this question very interesting. To me, when I was running my own startups, I had less stress
wow.
because I could do the actions myself, accept issues, and move on. In the VC role, all I'm doing sometimes is telling them what the issues are, and if the founder says "hell with you," I'm not going to listen. It just is a much more frustrating form of life than that. So my blood pressure, I mean, I always had, all the parameters from my 26th age on, I have had, all those things, because not because of stress, but my family always, my dad, I also had it. So, I mean, like cholesterol, all those things from the first checking on, I've always had those things. It's not like it's new for me, right? Being the first test guinea pigs for Lipitor and statins, etc., to now. So and even pre-diabetes, always been on the fence. I don't care too much. I have to control it, and within a tight band, I do that. But fundamentally, you really need, the stress is higher for me as a VC. Then I mean, all my parameters are higher as a VC than it is when I was doing my own startups, right? I mean, that's a realization I have made. My kids have made that realization for me and said,
Wow.
maybe this is bad for you, what you're doing. I haven't thought about it that way, but it is fundamentally from a numbers perspective that is indeed the case. So the only thing I do to get rid of my stress is I'm a really strong gardener. I mean, I grow roses.
I've heard, yeah.
Um, I probably have around 2,500, 3,000 rose bushes, probably somewhere in the range of 500 to 600 varieties. So I have a rose garden. I'm very competitive in life. Even in rose garden, I remember, my daughter's 12th grade, when they were taking pictures at one of, I don't know, that was Filoli Garden or San Jose Municipal Gardens. They came to me and said, "Dad, your rose garden is
Right.
not compared to those two." I went there, I saw it, and now I've beaten them. Is my prediction, because I am that person who typically does that. So it's something that I spend all my Saturday mornings on, and I truly enjoy doing that. No doubt about that. It's a very cathartic 3-4 hours. I go off and I do that every week basically.
That's good. So my last question for today, like what is your prediction for the startup ecosystem in general? I know it's a downturn now. Not everyone is getting the funding, etc. But do you see that the market will revive, the startup system will thrive? Any major dynamic shift that is going to happen? Your
So
predictions in general.
now, I mean, look, Bay Area behaves the same after any recession, right? Right now is the best time to do startups because you can get seed investment, and if you can deliver right now in a very calm and peaceful fashion. So you can get venture like from people like us. We have actually done more deals during the recession and startup than before, right? I mean, and the reason is it's an opportunity. It's an opportunity also for the founder to hire new talent because before that they would go to an ex Google employee, try to hire him, and he or she is sitting on a pile of stock at a high arbitrary value, which has suddenly come down.
Yeah.
Right. So the market has come down to earth that they look at it and say, maybe I should do a startup now. The delta of cash comp and stock, etc., doesn't stop them from leaving and doing a startup in a bad economy. So you get better talent, you get good money, and you also don't have the clutter of people making a paraphernalia of one or two things that's getting all kinds of funding associated with it, right? So the best time that if you look at any company that has been successful, it has either been like there's a whole pile of companies which are formed in 2000 and 2000, 2001 during 9/11, 98 when the internet in a bubble burst, 2008. Those have been like Google, for example, was founded during the internet bust regime, right? So you basically have good companies that get formed now. The challenge is to raise enough money to be able to go for a year or a year and a half before which the market will come back. I mean, every market comes back. There's no end of the world here. And when market comes back, people have very short-term memories. They'll go back to investing again into the in a sheep or a herd mentality, right? And new kids who have never seen that will join the venture force and will put more money into the space, which is all life, right? So there will be a good times in a couple of years. You just have to go through it right now for sure. And so this is the best time to do a startup. Right? Sitting on a big company, you're better time to leave because your stock price is also going to go down, whatever company it is, right? It's nothing to do with your performance alone. It's the market that's going to drag you down. And then one or two misexecutions from the company will drag it much further down. That if you ever wanted to do a startup or are thinking of being an entrepreneur, this is the best time to be an entrepreneur.
Wow, that's a completely new perspective. Thank you for that. And Rajiv, I mean, I think we are at the top of the hour, and thank you for spending a good 1 hour with us. We learned so much from you. Thanks for your time.
Thank you for having me on the podcast.